Morning, you're watching us here on Trading Hour. We come to you live from the CNBC-TV18 Motilal Oswal studio. I'm Mangalam Malu, with me Sonal. Well, the market is flitting between red and green for the frontline index. It's been lowered by the IT pack, which actually buoyed the index in yesterday's session. A couple of these upstream oil companies not doing too well as well. The broader markets, again, split right between red and green. So not particularly made its mind up. Still in range. So let's see how that goes.
Unable to make up their mind. But, metals, they've made up their mind. Today, the top gainers on the Nifty as well. That index is up 1.3%. Banks are not far behind because while the bank index is up around 0.1%, it's the PSU banking index which is lending it some support. So that index is the second biggest gainer in trade today. FMCG pack doing well as well. We'll, of course, discuss what's happening with ITC in just a bit. But other than that, it's few and far stocks which are buzzing on the upside. We have the likes of Tata Steel, there's JSW Steel, Hindalco, Apollo Hospitals, the stocks which are on our radar. And Nifty has seen that recovery from the lows in last couple of minutes as well. But ITC is one of the top gainers as well in trade today, 1.3% higher. Mangalam, what's happening here?
Well, over the last few trading sessions, if you notice, ITC has been doing well from its lows, and that's largely because the company has now started to affect those price increases, that the tax increase that happened, which was announced on the 1st of January with effect from 1st of February, and no relief coming in the budget. So all these companies, including the likes of Godfrey, Phillips, etc., should come up for you on the screen. And we have all these names doing well, largely because the companies are passing these price hikes. Remember, the tax hike was upwards of 30%, which would imply a price hike between 17 to 25%, which would mean that these companies will have to do it in phases. And now, as every phase progresses, the street reacts to that. UBS, for one, has written, they've cut their target price from 420 to 395, but because of the stock having corrected so much, they still hold their buy call. And they're saying that distributor checks indicate that a range of imminent price hikes is now being implemented. 84mm cigarettes have seen a price increase from 17 rupees to 24 rupees per stick. 64mm cigarettes from 6 rupees to about 7 rupees. That's a 15% price hike. And you have the pricing of 69mm Gold Flake, which is yet to be announced, is expected to be around 12 rupees per stick as well. They've been fully passed on premium cigarettes, kept minimal in the price-sensitive cigarettes. That is to basically minimize the impact on both volumes as well as the EBIT. So that's something that the companies are dynamically doing, and that's brokerage is taking note of that as well, which explains why the stock is up 1.5%. But again, after this kind of correction, the street is finding value here as well. So not necessarily linked this move to just price hikes.
Okay, take that point. Thank you for explaining that. But Aurobindo is the other stock on our radar. It has received a number of observations for its Unit 7. Ekta has accessed the observations, the note as well, and is here to tell us more. Ekta.
Well, yes, the observations to Unit 7 have been made public now. Just to give you a background, this particular plant was inspected from 28 January to the 10th of Feb and was issued 9 observations in total. Now, in terms of a couple of the observations which stood out, for example, they have pretty much, spoken about how the equipment and the utensils were not cleaned at appropriate intervals, which means that that's more drug-related cleaning. And appropriate controls were not exercised over computers or related systems. Complaint records were deficient. Now, it is interesting because some of the analysts have brought up concerns for the 6th observation, particularly in this particular Form 483, where they say that there could possibly be data integrity concerns there, and where the microbiologist potentially has falsified sample collection data. And that's basically what is indicated in that particular Form 483. So the street seems to be quite divided in terms of what the observations or what the route would be in terms of the observations going forward, if in case it would possibly escalate to an official action indicated status, or maybe a possible warning letter as well. They don't see a escalation beyond that at this point in time. On the other side, some of the analysts are of the view that the observations are procedural, and this is something that the management has told us as well. They don't see any serious data integrity, patient safety concerns. However, an official action indicated status cannot be ruled out, but they don't see it escalating beyond that. They see a voluntary action indicated status, which means that they can produce from the plant quite freely, and there would be no escalation clause likely. As the likely outcome in this particular scenario. Now, just to give you a background, Unit 7 manufactures oral solids, and this is not the only plant which has been under the scanner. The Unit 3 was also just about recently inspected by the US FDA and issued 11 observations. That already has a warning letter. The company said that totally, or analysts say that totally, these two units comprise of around 33% of their ANDAs or outstanding drug applications in the US.
Take that point, Ekta. So the stock is at the day's low, down 4%. Thank you so much for explaining what's happening with the stock as we speak. But let's talk about Dabur, because there has been a management change there. What does it mean? Tell us more, Mangalam.
Well, for FMCG companies, typically it's the management change that can cause a bit of an inflection point. For Dabur, the whispers were there for a very long time that they are looking for a new India CEO, India business CEO, and Harjeet Balla's name was also doing the rounds. Now, it has been made official where Harjeet S. Balla, who has been announced as the CEO of their India business, with that Mohit Malhotra has been elevated to global CEO. So Harjeet will now be reporting to Mohit. At the same time, Harjeet has experience from Unilever. He has worked at Hershey's, prior to which he was with Metro Cash and Carry India as well. So one assumes that maybe, by virtue of his prior experience, the focus will be on acceleration of growth, on channel strategy, and what it is that they will be doing when it comes to some of their innovations and investments in the digital ventures as well, especially after the company announced its Dabur Ventures arm, where they would make investments in some of these digital D2C sort of brands. So the stock is currently lower largely because of, this having been in the works for a while. And the street now would await and see whether he makes a difference to the India business when it comes to increasing volume growth or not, because the company is guided for mid-single digit volume growth and high single-digit revenue growth in the next few quarters.
Okay, that's about Dabur. So a lot of stocks which are on our radar today. With that, we'll do one thing. We'll slip into a short break. When we come back, we'll focus on the bond market with Manisha Gupta on the other side.
Presents Bond Street.
Welcome back. You're still tuned into Trading Hour. As promised, let's shift focus to the bond market. Manisha Gupta is joining in now. Manisha, what do you have for us?
Well, thank you for that. In Bond Street, we're talking about the overall bonds, which have opened steady for a second straight day this time around yet again. Well, this is after RBI announcing a second debt switch. Well, with it, this is an expectation that the government will buy back nearly 25,000 crore worth of government securities. What this is expected to do is that this will ease supply concerns, one, and markets also is talking about on how this could perhaps also bring down the gross borrowing number for the FY27 to rupees 16.2 lakh crores as well. The other thing, the other cue really seems to be coming in from the international market, where you have the tepid US Treasury yields that also seems to be supporting the Indian bonds therein. But going forward from here, it really is going to be the focus on the US FOMC meeting minutes. Well, that comes in today. And then you have the US GDP data that comes in on Friday. So between these two data points is where you will see Indian markets reacting as well. Interestingly, since the budget and the SEBI official, everybody talking about the Indian bond market, the debt market that is, the mutual fund investors post-budget have seen a lot of market focus come back in case of corporate bonds, also short duration funds and money market funds as well. I've been talking to various treasury heads as well, and they tell me that the spreads on corporate bonds in the 1 to 3 year segment has remained attractive, and they have seen a lot of money flowing into that direction too.
All right, Manisha, thanks a lot for that. We'll take a short break on that note. On the other side, market technicals with Sneha Seth of Angel One joins in. And we'll also discuss their top trading bets. Right now, the Nifty holding around the 25,700 mark. Sneha Seth will probably give us some direction.
CNBC-TV18 and India Bonds presents Bond Street.
Around 25,700 for the Nifty. Just look at the cues coming in from the F&O space. The Nifty is around the 25,700 mark, but at the same time, if you look at the Nifty Bank, it's not yet made up its mind. The mid-cap index is marginally the green. It's the IT index, which did well yesterday, is now dragging the frontline index. And alongside that, we do have a bunch of these oil majors as well, the likes of ONGC, etc., which are lower. For the Nifty, though, a technical range has been established so far. If you look at the Nifty intraday along with the 20 and the 50-day moving average. The low of the Nifty around 25,500 is where the 20-day moving average is, and the high of the Nifty is around where the 50-day moving average is, which is around 25,755. So if one was to make that broad range and those two lines come up for you with the 20 and the 50-day moving average, you would see that the Nifty is positioned itself in that range itself. And the option writers, as a result of which, are looking at just those levels. So we have the 25,700 call and the 25,700 put. Both of them are equally active in trade. So the 25,700 call comes up for you. Alongside that, we have the 25,700 put that will come up for you as well. Both of them combined premium of almost 250 rupees. Again, telling you that between 25,450 to 25,950 is where the entire range of the market is. And this is for options that expire next Tuesday. So we have enough time for the next expiry as well, which is why the range is broad. In terms of individual stocks, a lot of them are fairly well bid today. Metal names are doing well. So Tata Steel has a lot of long positions being added. BSE is the other one which has a lot of open interest build up as well after some decline that we saw earlier. With that, what we'll do is we'll get to Sneha Seth, who joins in. Sneha, the Nifty has been range bound. What's your sense? Is it consolidating at a higher range, or is it waiting for a bit of a breakout or breakdown?
So overall, I believe it's in consolidation for now. After some wide swings, we are seeing some consolidation in Nifty. At present, I believe the support zone is placed around 25,550. And on the higher side, I believe the resistance is placed around 25,800. So once we see a move above this range, then only we may see some buying interest coming. Interestingly, if you see at the banking index, that has been performing. So looking at the banking index specifically, I believe Nifty may head on the higher side instead of going, breaching the support zone. So a bit positive looking at the overall chart structure for banking index and Nifty. So I think one should be, not need to be very aggressive, but use this to go long.
Take that point. Any individual stocks on your radar, Sneha?
Individually, I like Axis Bank from the banking space. Now, this counter has done quite good. There was a resistance placed around 1360, and today we are seeing this counter surpassing those levels. So I feel that looking at the overall chart structure, one can go ahead and long this counter with a fixed stop loss of 1335, and the upside potential will be around 1410. Apart from this, Dr. Reddy looks quite good. Now, if you see the overall chart structure, the falling trendline resistance was acting as a hurdle, but now this counter has surpassed those zones. So I believe we can see follow-up buying over here. Looking at the options activity, also we are seeing decent unwinding in out of the money call options. So I believe one can go ahead and long Dr. Reddy as well with a stop around 1249, and upside potential is around 1340.
All right. Do you have a call on ITC? The stock has seen some bit of bottom formation, and from there it's recovered a bit. So from its 52-week low, it's up around 9 to 10%. Do you think this is tradable?
So far, yes. Last 3 sessions, we are seeing some buying interest coming in. It has also managed to surpass the 20-dem on the daily chart. I believe one can expect this counter heading at least towards 345, 348 as the level which I'm watching for this counter, looking at the volumes for now. So overall chart structure looks good, and yes, one can keep a stop loss of today's low, that is around 380, and go long for the target of 345.
And Sneha, thank you so much for joining in with those individual names and stock checks as well. But let's do one thing. Let's now cut across to the AI Summit in Delhi for a conversation with Tech Mahindra's Chief Technology Officer, Shyam Arora.
As enterprises are moving from AI pilots to scale deployments, the real test is now in execution. The focus has now moved to real-world integration, responsible AI, and what it does for IT companies. So the challenge for IT services firms here is twofold. First is how they help their global clients adopt AI at speed while also future-proofing their own growth with the onset of artificial intelligence. Joining me now to decode all of this is Shyam Arora, CTO at Tech Mahindra. Thank you so much, sir, for joining us at the CNBC-TV18 Edge AI studio here at the India Impact AI Summit. I'd first like to start by asking you that enterprises, like I said, are now moving from experimentation to execution. How are you future-proofing your clients and helping them adopt AI at speed?
Well, first of all, Rachna, thank you, and thank you to CNBC for having me here. I think that's a very, very fundamental and a very good question. And you know, as you probably know, I come from Standard Chartered Bank, where my entire work was towards building scalable technologies. And if you look at our brand, which is you know, scale at speed, right? And that's exactly what we are doing. So we have built platforms to adopt the responsible adoption of, you know, let's say technology like agentic AI across multiple different processes that our clients want to transform. So our agentic AI platform is called Orion. Similarly, we built a platform to train the language models, and it's called Indus. And you probably have seen that as a part of the AI Summit here, we are launching Indus 2.0, which is a language model built for you know, Indian context and Indian languages for you know, college, for the kids' education. So I think the best way to create scale and you know, scalable advantage for our customers is to really deploy platforms which allow you to do multiple things or multiple processes or start solving multiple use cases using the same technology or the same platform. Of course, our platform has a lot of flexibility. It allows you to use different models. It allows you to be able to define your own flows. It allows you to start creating your own agents and, you know, start giving context to the agents, etc. So that's I would say one way of doing it, or I would say the right way of doing it. But of course, underlying that is, of course, there's a lot of work that you need to do in terms of how you know, modernize your technology platforms lying underneath, how you expose the data so that that's available for the AI to consume also underneath. So there's aspects of architecture that you need to look at across the enterprise. But of course, how do you adopt these technologies responsibly and properly is by way of platforms.
Right. Responsible AI is truly the theme that we're seeing unfold here at the India Impact AI Summit also. But first, I'd like to understand, in terms of making it all accessible and possible for your clients, where are you guys on the journey there? Because the speed at which AI is changing every day is probably more faster than the light speed. But how do you adopt to that speed? At the same time, where are your clients on this?
Right. So I think, again, as you said, there's a lot of innovation going on in the space of AI, and I would say specifically in the way the models are evolving, there's a lot of innovation going on in that side of you know, AI, etc. And if you think about it, the models are helping you do some of the tasks, typically, you know, let's say code creation tasks, in a slightly better manner or in, you know, a more assisted manner, in a manner that you're able to use quite a lot of the, you know, components of code that is being generated by these agents, as long as the right context was provided to these agents. So overall, if you see the other part of the AI, which is, you know, if you think about AI also allowing you to transform experiences, transform businesses, or create new innovations, I would say those parts of uses of AI are yet to pick up at speed or at pace. We have done, I would say, huge number of work with a number of our clients solving very specific problems for them. And these are not, let's say, tasks that we are displacing. This is just, let's say, you know, inefficiency that sat in the system. So, you know, systems used to have a greater downtime, or it used to take, you know, huge amount of time to understand manuals written in different languages so as to be able to interpret and then start fixing the equipment, or, you know, leave alone doing any preventive or predictive maintenance. So there are all kinds of aspects of experiences which were broken or value that didn't exist, which is now being created by use of AI. But I think that journey in terms of what the possibilities might be, where the experiences can get transformed or life can get much more convenient, those are the types of values that enterprises will exploit and explore more and more in times to come.
Right. What we saw unfold in the month of January with what was happening to IT services firm across the world sort of led to this fear of a SaaS apocalypse. How much of that do you think is true? Because experts here I've seen argue that SaaS is the foundation for artificial intelligence and that it's a layer that gets added on. But what's your take on it?
So first of all, I think SaaS is a too general a term, right? I think the systems of record are always going to stay. So if you look at a SaaS as a system of record of, let's say how an ERP is, chained, or how, your client data is being recorded, or how anything else. Those systems of record are always going to remain. The workflows on those are going to evolve, right? The experiences on those are going to evolve. And that has always evolved, even in the past. It's just that now the possibilities of that evolution have gone up much more significantly. So that's the way I see it. And I think you also spoke about the disruption overall to the industry. And I think that was more because I would say when people look at AI as a very small portion of the work, or what it's doing to a small portion of work, they start thinking about, oh, what's happening here? But if you think about AI, it's absolutely like a layer cake, right? Starting right from energy to infrastructure to data to models to application to orchestration, and then the experience layer. Now, if you look at let's say Tech Mahindra, we are doing work across all of these layers, right from infrastructure to creating models to creating an orchestration engine, which is Orion, as I spoke about, to the applications and the experiences, which the transformation of that was not really possible earlier, and that's what the enterprise is exploring today. So I would say the work using AI is getting richer, it's creating better value, and the ROI of the investment going into IT is becoming better. And that's the reason I think this industry is going to continue to grow and continue to attract more money from the enterprises to create even greater value for their clients.
All right, that's the word coming in from Tech Mahindra from the AI Summit. With that, we'll slip into a short break now. When we come back, we'll discuss the market fundamentals with Amisha Vora of PL Capital. Welcome back. You're still tuned into Trading Hour. Amisha Vora, chairperson and MD from PL Capital, is joining in now to discuss some market fundamentals. Amisha, good morning. Thank you so much for joining in. Well, I have to start by asking you about the IT pack. There's the buzzword AI, which is leading to that sharp fall in stocks. We did see a recovery yesterday, but that was sold into today. So many conversations, so many partnerships happening at the AI Summit. What do you make of that? Is this something which could be a future threat to Indian IT, or you think valuations are reasonable now for that pack?
I think that, this also offers an opportunity because across the world, organizations will have to adopt to IT. And in that, our IT services company, those who can really reskill their workforces to be useful for these organizational transformations using AI. Because see, now the corporations will have to use AI agentic bots across all their functions. It will not be restricted IT as one function, be it their sales, marketing, be it their operations, be it their logistics, be it their supply chain, be it their reduction in inventory. I think the opportunities for using AI and making AI usable and agentic for different industries, different corporations itself is a big opportunity. So I feel that there will be winners and losers who really make their workforces more capable of offering solutions. And in turn, the requirement of number of people by the IT companies will reduce because the coding, which will involve much lesser human effort, but other things will. So I feel, there will be winners, but at this valuation, coming back from portfolio perspective, particularly, I would feel that these companies are valued very fairly, and there is no crackdown, which I see, frankly, both because of the fact that March 26, they posted about 4% growth on an average. That is what Street is expecting. And based on their total value of contracts, March 27 Street, including my analyst, is at 6 to 7% plus growth, and bottom line growth to be double digit. So with this valuation, I think that it will find support till it emerges how the growth over next 3 to 5 years is really panning out.
Right. Growth is middling. Actually, the street is worried about multiples derating, and that's for not only the IT sector, it's also for the FMCG sector, because for the last many quarters, growth has evaded them. And the street then believes that if there is no growth, then what's the point of 50, 60, 70 sort of multiple? And that's exactly the thing that's perhaps playing out in both these counters, and maybe the street is not looking at them as defensives anymore. Would you concur with that, Amisha?
So first I will talk about IT. See, IT is suffering because of the fact that within the technology, globally, the growth is in the vicinity of quarterly 30 to 50%. When we come to services model, which India currently has of some of the large IT companies, we are annually at 4, 5, 10%. So there is a huge disparity and dislike. But when we see the way things and models will evolve, I think the markets, particularly Indian markets and analysts, are not figuring that there is a huge possibility of margin uptick, because if a lot of work is getting done coding by putting the bots or agents, I'm sure it will be margin accretive over a period of time for Indian IT. And beyond that, the current contracts which have come, which will be implemented, say, for example, in 27, there is no rate change which has happened till now. And we have rupee also going a bit in our favor. So I think somewhere market might get a little surprise, both in terms of top line and bottom line growth. Coming back to your valuation theory, I think, yes, we need that visibility emerging that with AI, how partnering AI for developing enterprise-specific models and also industry-specific models is a big work, translating into orders, translating into workforce reskilling. Once markets start seeing this, I think that they will start believing in the long term and start giving valuation again. So that is going to take a little time.
Okay, Amisha, last question before we let you go. Which are the sectors which you are very bullish on now, considering the fall that we saw in markets? They're reasonably valued, other than IT and FMCG pack that we've been talking about.
I'm extremely bullish on power. Power showing itself by way of both the power generators, power savers or battery storage, power transformers, wire cables, transmission, the whole chain of power, renewable, but also largely the fossil fuel power also, I think is going to be a big beneficiary of the entire AI move which is happening. And they are available at a very reasonable valuation. If you take a stock like NTPC, I think it's available at a very, very reasonable valuation with good growth, good cash, good dividend. And of course, you can further percolate down in the sector, as I mentioned. So I think apart from the fact that we are bullish on defense, we are bullish on financials, we are the news and metals, now we are very bullish on power.
All right, bullish on power along with metals. NTPC is a stock that you like. Amisha, thank you so much for joining in and giving us your views on IT, the valuations, what the street is making of them, but at the same time, some investable ideas as well. But since you spoke about AI, the disruption is the buzzword for the IT sector. We'll tell you how it's playing out for the sector after this short break. Keep it with CNBC-TV18. Welcome back. If you look at, the IT pack, that's been disrupted by artificial intelligence, conversation around that. And it's been the buzzword over the last few weeks, with Indian IT stocks taking a hit over growth concerns, companies announcing a host of tie-ups to develop the AI opportunity. The stock's doing well yesterday, but now selling off once again. How much does it contribute to the sector? What are brokerages saying? Why are they still bullish? Rima has all the details. Rima.
Thanks so much for that. As you said, generative AI may be dominating the narrative. It may be the buzzword, but the actual revenue contribution from advanced AI or generative AI is still in early stages. Now, yesterday, Infosys at the AI Investor Day said that advanced AI, generative AI, contributes about 5.5% to their overall revenue, in line with, say, a TCS at 6% or an HCL Tech at nearly 4%. But remember, the definition of AI may vary across companies, making direct comparisons a bit tricky. Now, how will you read this number? Will you be a bit disappointed because AI has been around for some time, but you can still say that the contribution is only 5%? Or will you look at it as a half glass full and say that, well, the AI contribution is only 5% and therefore look at the significant headroom for expansion? Brokerages are fairly bullish. A lot of notes came out on Infosys overnight, and out of the 52 analysts tracking the company, 38 are a buy, 12 have a hold rating, and only 2 of them have a sell rating on the stock. Global brokerages like JP Morgan, Jefferies, UBS, HSBC, CLSA have all reiterated their bullish stance. For JP Morgan, the target price is 1,020. For CLSA, it stands at about 1,790. Now, why are these brokerages bullish on Infosys? Well, the bullish stance, or the constructive stance, rests on 5 key drivers. One, the AI opportunity. Remember yesterday, Nandan Salil Parekh spoke about how the AI services opportunity is $300 to $400 billion by FY30. So that is creating a very large total addressable market for the Indian IT companies. Secondly, and this is a big one, data modernization is emerging as a key driver because enterprises need partners like Infosys to clean, organize, and modernize legacy data before you can actually deploy AI at scale. Third, Infosys' collaboration with Anthropic is also seen as a big positive towards developing the AI ecosystem, staying relevant, and using these highly productive tools. Fourth, for the near term at least, the macros are looking better. So FY27 growth is likely to be better than FY26. And fifth, valuations for Infosys at least are 18-19 times, which is cheaper than the long-term average of 20 times. So in that sense, there is valuation comfort. So while the message from the brokerages may be clear and positive, it's still disconnected with what's happening in the market because the IT index once again is under pressure. In this month itself, it's fallen close to about 15%, and it's not a global story because even if you look at the global ETF, it's called iShares, it's a software ETF, that is down more than 20% on a year-to-date basis. And the other big worry, which is on the economy front, on the jobs front. Yesterday, Nandan Nilekani said that 92 million jobs may be lost because of AI, but 170 million may be created. But as of now, this is the picture for the first 9 months of the year. Across the 4 large cap IT companies, the net headcount is down. It's down, 700. It's on account of TCS, but you still get the message, right? There is to some extent a AI jobs decoupling. What would take 10 engineers before is now taking 5 engineers plus AI. So in a world where there is a decoupling taking place between AI and jobs, what happens to job creation is also a big economy worry point. Back to you.
Thank you so much for joining us with all those details. Earlier today, we spoke to Cristiano Mon, who is the president CEO of Qualcomm, and he said that India is going to be the fastest growing AI market in the world. Listen in.
And if you look at how fast the internet develop and how things leapfrog, into the future, especially when you think about digital payments and everything that is now happening with smartphones. When I look of AI, that's going to repeat itself in India, but it's going to be more powerful. The reason it's going to be more powerful is because AI has an incredible ability to empower people. The same way that connecting to the internet has fundamentally changed, I think, people access to information. I think AI is going to take that to the next level. How you get access to information, how you train yourself, how you get instant feedback about things, how you learn about things, how you do different things augmented by an agent, and how the entire economy of agents is going to get developed. I think India has an opportunity to be one of the fastest growing AI nations in the world.
All right, and CK Vijay Kumar, who's the MD at HCL Tech, also told us yesterday that there will be 2 to 3% annual deflation, which they've modeled in for due to AI. Let's listen into what he had to say.
We believe there will be 2 to 3% deflation at an overall level because of AI. And this is something we've modeled. But there are at least 5 mega opportunities that we are chasing, right? AI factory, it's $1 trillion capex will mean at least $100 billion of services spent, and at least a couple of $1 billion we should be able to get from that. Physical AI is again another big opportunity. The whole agentic implementation. See, there is a huge legacy install base. We had called out about $600 million annualized revenues, advanced AI, and once again, this is different from regular AI revenue a lot of companies are talking about.
All right, with that, we'll slip into a short break. When we come back, we'll get you more on the markets on the other side. Welcome back. Absolutely flat on the Nifty, but with some negative bias. Even the mid-cap index is struggling to be in the green for now. The Bank Nifty is outperforming, but the markets have come off from the highs of the day. The IT pack continues to be on our radar. But with that, we'll take your leave on this edition of Trading Hour. Halftime report is up next with all the market action.